Okay, welcome back. This is another update on the market, looking at the technical charts and where I think we're going and where we're at. So we just came out of a big week. It was a Fed week, FOMC week, and I was talking about last time that I made an update. We were around this area, I think at the end of November, early December, and what I was expecting was a pullback in the market because we were kind of at several areas that looked like resistance. What we got instead of a pullback was sideways market action and then a breakout. So I was kind of thinking there was going to be a pullback, to maybe fill this gap down here at 439 on the S&P, but we never got that. It was just a straight sideways action and breakout. Um, I think that breakout for me became obvious, I would say this Monday. That's when it's like, okay, it's clearly no longer consolidating sideways. It's actually breaking out. Friday was a maybe because it broke a new high relative to the previous few days. So I'd say Monday was the definite time that I would say no longer was short biased. But the concern was that's going into CPI data, PPI data, and the FOMC. So it seemed like the market was getting ahead of itself. The FOMC came on Wednesday, and that was fuel for the market. Basically, they are basically Powell is now openly sort of admitting that it's on the table to do several rate cuts over the next year. Whereas before he was sort of not acknowledging that the market was expecting that. Now he's acknowledging it and basically said it was a possibility that they might do it. But of course, in his usual language, said that they were going to proceed carefully and take it month by month, which is pretty much what they would always say. The market took that as rocket fuel and away it went. So the question now is whether this is a blow off top. Can this rally be sustained, or is it an actual blow off top? I think generally the Christmas rally, or the so called Santa Claus rally, happens, I think, around December 20th onward into the beginning of January. So it's not even, it's December 15th today, and the market's already rallied pretty significantly. We're up 3% on the S&P, and we also broke all-time highs on the SPY. We're not quite all-time highs, I think, on the SPX, but on the SPY, which is what most people trade, that is at all-time highs. So the obvious question I have is like, what's the next key level of significance, where you would either want to look at getting out of long positions or shorting. And from this chart, I had a possible projection here, basically going from here, the bottom of the last correction, to the top. If you project that up, that sends us at just above 500. Maybe you say 500 on the S&P because that's more of a round number. But as what we can see here is, other than looking at the hourly chart and seeing that, okay, clearly I think we're running out of momentum a little bit here. This could just be a bull flag before a continuation higher. What I do want to look at is the SPX, because I did just draw a few more lines as possible areas, inflection points, so you can see if this is forming a new sort of rising wedge pattern, then based on the previous 2 points in August of 22 and July of 23, we have hit the top trend line of that rising wedge. So I think that's one indication that it might be possible we get a pullback, but that's not confirmed. something to look for. Now on the SPX, you can see we have not broken new all-time highs. We're actually below the all-time highs. So this still also gives the possibility or the potential of a massive double top on the SPX. So that's another thing I don't think, that's another reason I don't think we're free and clear to say the market goes higher from here. And what I think would be quite bearish is if over the next 2 weeks we lose all the gains we've made in December, because then that would be basically a topping candle, a thin wick topping candle, or a flying shooting star, I think is the correct term. So right now, I don't really have any bias other than to say we're kind of at an inflection point there, based on the SPX chart. VIX, we clearly broke down from this lower trend line. You can see we pierced it for a day or two a couple times, but then it looked like it was recovering. And on Monday, December 11th, that looked, I guess that's the first day of this week, looked like it could have been recovering to jump higher, but instead it broke down on Tuesday. And that was I guess you could say that was almost something you saw ahead of time, ahead of the FOMC meeting, that did not look right if you were short the market. Because usually this VIX, follows the technicals fairly well, in terms of respecting trend lines and major levels of support and resistance. So since then, we've been consolidating down here. We can see this is this, I guess, 12-15 level, all the way down to 1180 on the VIX is pretty major. If we go to the monthly chart, yeah, this is just a hard chart to look at on this resolution, but basically going all the way back, it's rare that the VIX breaks below like 1180. So it did for December 2016, January 2018, and that was ended with a huge volatility spike, a big sell-off in the market. And that's typically how this goes. The market gets more and more complacent until something breaks it. So something unexpected comes along and causes people to panic. That's kind of what's shown here along most of history in the VIX. Now, I think at the very least we consolidate around these levels in the VIX probably for a couple more months, just because that's what historically happens before a major move. And if it does move down even lower, it's going to drift down slowly over months and months. So I think the real question here is, does something break in the market? When does something break in the market? It's definitely a cheap time to buy puts around here. Although it may be, a couple months before any sort of volatility spike even happens, or major correction in the market. Looking at the ES chart, which I like to use just because of this long-term trend line or trend channel that the ES has followed so nicely. Let's go to the daily chart to show what exactly it did. Basically, on last Friday, this ES gapped above, and since then it stayed above this lower trend line. So if we do get a correction, I would be looking for a correction down to this trend line, most likely. Although you can see that since the first time we broke this trend line, it's not super well respected. So this trend channel could be, basically breaking to the point where it's no longer useful. As you can see, we've had like so many violations of it, since 1 to 2 years ago. Um, so there's that. If you go to the RSP, which shows equal weighted market cap, we did um, almost hit all-time highs, but not quite. So we're basically at a point where there's still potential for this to be a massive double top on the RSP. Something to point out is that we've been kind of making slightly higher highs over the past few months, I guess, over the course of 2023. So February 23, and then slightly higher high in July, and then another slightly higher high. So this is showing that this is a potential area where it's going to pull back. Um, if we look at SPX to the M2 money supply, this is something else that's interesting or worth looking at. We did break above this level, which I saw as, I guess, yeah, this level was sort of major resistance based on the last two times we hit there. But you can see it was not super clean cut. We had a slightly higher high, and then now we have another slightly higher high. So although we reacted back in July and had a big market correction from that level, we broke back above it, and now we're at this slightly higher high. Now, I think I'll say the same thing I've said before, in that with this sort of sharp correction and sharp snapback, it seems like it wants to go higher than just break out of this pattern. So that remains to be seen. I think we'll just be watching to see if it does break above this trend line, or if it reacts here and has a big correction. On that subject, I think something that biases me towards a continuation higher is the fact that if you look at a similar chart, the NASDAQ to M2 money supply, if you make the same sort of trend line, going from the peak in November 2021 to July of 23. Actually, that's not quite the same trend line. Let's see where, okay, so it would have been, yeah, you can't make the same trend line. So maybe this is an invalid point, but if you do project a trend line from here to here, then we did break through that. I guess I don't really trust that very much. So forget what I said about that biasing me towards this going higher. I don't think it says much of anything, but we did break this previous, November of 2021 was the all-time high going back into the dot-com bubble. So we have broken above that. So it just remains to be seen, okay, do we actually continue on? Oh yeah, and I guess another thing that might tell us that we're going higher is the fact that if you do, yeah, this was the trend line I was actually looking at. If you project from the top of the dot-com bubble to the top of the market in 2021 to the top of the market in July 2023, we have broken above that. Furthermore, we're well within the range of where, I guess the trend range where the market has been since, 2009. So this chart is basically saying, yeah, we definitely have room to go much higher before any major correction. I guess, yeah, maybe even to the height of the dot-com bubble, or resistance going this far back is a lot less reliable. But sellers may see this and step in at some point. Like if we hit a new high or hit the top of this range, that may be somewhere where people step in. But for now, this chart alone is saying we broke out, we're going higher. Maybe a back test, but ultimately we're going higher. If we look at just the triple Q chart, the chart we were just looking at, that was the triple Q to M2 money supply chart ratio chart. We basically have a breakout to all-time highs here as well. So you could even, draw a trend line, something like this, and say, okay, we broke out, back tested, and now we're heading higher. So yeah, this chart is basically saying until we just run out of steam, we're going higher. Now, jumping back to the SPX to M2 money supply chart, what I wanted to say was, maybe I already said this, but basically if you project from the bottom here to the top here as a possible top, that would put us up here. So I guess it would say we're kind of halfway through the rally. Something else to look at, I'm kind of jumping all over here, is what happened in previous scenarios where the market seemed to just have a melt up, kind of an elongated melt up. I think there's a few cases in the past couple of years where that's happened, and actually it might be helpful to even bring up. A VIX is a good indicator in this. Looking at this analysis, okay, so we kind of had a few melt ups, or what I would call melt ups. It's kind of subjective what constitutes them, but generally I see a melt up as something, where you basically have slow, steady gains for a long period of time, that are, steeper than usual markets. So in going up into September of 2020, we had kind of a period from June to all the way up to September where we didn't really have a significant pullback. There was a little bit of flat period. And at the end of the melt up, it was the steepest gains. And what you can see here is on the last day of that, or on the last few days, the VIX started to curl up, which is kind of unusual. Usually the VIX goes down with a market that is increasing, but the VIX started to curl up, indicating that people were buying protection at the end. So maybe someone knew something, big market mover or fund was starting to buy puts and starting to get short into this, and so that caused a mini crash in the market. The other time that we saw something like this, I guess you could argue this was kind of melt up from like October 2019 to February 2020. Same thing where the VIX kind of bottomed out and then started to curl upwards as we were making new highs. You can see this is a new high in the market with a higher low in the VIX, and a big crash followed that. So it was kind of subtle. The VIX didn't go much higher, but it went from making lower lows to higher lows before that happened. Let's see. I think another notable case was here in October 2018. And again, you sort of had that slow creeping up in the VIX before the market topped and flushed it down. And here, December 2017 going to January 2018, same thing. The VIX was going up with the market. So with these sorts of melt ups, I think that's one major thing to look for, is what is the VIX doing along with this. So far, the VIX is still going down and making new lower lows. So barring some event nobody expects, I think that the VIX is saying the market's in the clear for now. Okay, that said, yeah, if we look at just the NASDAQ futures, I don't think there's much to see here. I guess um, we can look at this long-term trend line. As you can see, a lot of um, a lot of tops were made along this trend line, and then we had a blow-off top in the 2021 market, 2020 to 2021 market, had a slight or brief break under that, and then now we're coming. We made it back into this trend channel, and we're sort of moving towards the top of this channel. So once we hit the top of this, I would expect, either a crash or a slow rollover, um, just based on, the statistical significance of this chart or this trend line, this upper trend line. And we're actually pretty close, but we're not there yet. So that's something I'd be looking for. Now, there is a possible trend line that could be made here. So we probably hit both of these around the same time. It would be my guess. So maybe another slight correction, and then we move up there. Just for fun, let's see where this goes. So yeah, maybe we correct down to this trend line again, or before moving up. It looks like the market is starting to, or this is starting to run out of momentum if you look at the last few days. So it could mean some sort of correction coming. But if it's pretty shallow, then that's probably pretty bullish for at least the short term. Okay, the IWD, that's the wrong one. The IWF is the growth ETF, and you can see potential upper trend line in this rising wedge that we just hit. And so that sort of supports the idea, as well as we just hit a new all-time high, or we are at the all-time highs basically. So this supports the idea that we get a pullback here. XLK. Again, this is not quite, I'm not sure what to make of this in terms of chart analysis. I guess we have this long-term trend line that we have, we broke above once in this, the 2020, 2021 market, broke back into it, and now we're above it again. So there's no telling where this will top based on this chart alone. You could say, okay, maybe we have something like this where it's close to a top and then it rolls over and has a correction. Most of these charts should tell similar stories because they include a lot of the same stocks. Looking over at the Magnificent Seven, or at least a few of them, Apple came very, very close to hitting $200 today. It looks like it got as high as about $199.50, which if someone was going to short it, might be close enough to say go ahead and pull the trigger and short it. You can see we have bearish divergence on the RSI. This chart's kind of a mess. Let's just if we look at the big picture with it, we're kind of within range on the major trend line going back to 2009 and earlier, or the major trend channel. But we are at all-time highs. We did do what looks like could be a double top here. Slightly higher high, close enough to where it would be considered a double top. And from here, I would expect 200 to be the major resistance, and then a rollover here. To me, this doesn't look quite as bullish as like the triple Qs or the SPY. I could see something like this where it um, establishes support around where the previous support was, and then from then there we'll see if it breaks down or continues up. It may just move sideways in a range for a while, between 165 and around 200. So that's something to watch for. It does look like stocks have been rotating out of the Magnificent Seven. There's been a few days in the last week or so where these stocks have been red and almost every other sector in the market has been green. So that is supporting the idea that there's a major rotation going on. Like the RSP, equal weighted S&P, has been outperforming the S&P. So that shows that all these big name stocks have really been underperforming for the last week or so. And so if that continues and that rotation continues, I think the smaller cap stocks or the lesser stocks will be favored. If we look at Microsoft, we do have this long trend channel. We're still not back in the channel, or I guess we did break into the channel for a little bit a couple weeks ago, but then we broke below this channel and we've been staying below. And that's also supported by a potential trend line here. To me, that's kind of long-term bearish on this. And even if we pop up again here, make a little double top or something, that's still, to me, bearish for this stock. Google, not quite as clear what's going on here, but it still looks like it could be making a rounded top. Or you could say, okay, head and shoulders on an angle, with this being left shoulder, right shoulder. So yeah, the picture for these stocks is not looking nearly as bullish as the main indexes, which is definitely a change from the theme of the last few years. Of course, it's possible that this comes down. If it tries to break down from this line and then it has a false breakdown and goes higher, then that's definitely a bear trap there, and I would expect maybe another retest all the way up to the top of this channel. But until then, my expectation is if we get a breakdown of this line, then this stock is most likely going to the bottom of this trend channel. So that's Google. Now Amazon. Yeah, it's kind of right at, I would say, the last line of resistance. If it breaks above this, then we probably move back to near all-time highs up around here. For now, it's hard to say because it looked like we were rounding out here, but now it's going higher. And once that happens, the potential of this being a rounded top is kind of nullified. So my bias is kind of that this breaks higher, but I wouldn't bet on it until it actually happens and then we start moving higher. Otherwise, I'd probably just stay away from this. But overall, probably neutral on this. Tesla did have a breakout, which is short-term bullish. Now Tesla has been a major underperformer. You can see we have all-time highs up here. Most of the big tech stocks are at or near all-time highs. Tesla has been the exception, and then it's kind of been in this downward correction or downward channel since really, I guess, June. So the fact that this is broken out says, well, there's likely at least some upside on Tesla. How far it goes, generally, if you look at a projection for a breakout of this type, you look at something like moving up to the difference, or the distance between the consolidation area. So that could put it up around 300. That would kind of bring it back to this level of resistance back from 2022. Another potential area, if it stops short, maybe over here, because there's major resistance here and here. But in general, yeah, looking for a little bit more upside in Tesla. Facebook or Meta, this one's a little bit, I'm not as sure on. Like, up into about this point, it looked fairly bearish, but the fact that it broke and made a new high and is kind of crawling up from here makes it a little bit less clear in my mind, just because the last low was up here at this sort of midpoint of this trend channel. Often that comes before a breakout is when it hits the top of the channel, pulls back to the halfway point, and then breaks out. But at the same time, the momentum has not been very strong since it hit that midpoint. So I'm kind of, I don't really know. If it does turn around here, which it looks like it may be, then I would expect to move down to at least the bottom of this trend channel. If it breaks above, then I probably expect a breakout. So this purple dashed line is kind of important as far as I can see. NVIDIA, this one looks almost the same as Meta because you can see we had this sort of consolidation. It looked like it broke down and then it recovered. And then from there it made a new all-time high, corrected to this halfway point of this channel, and now it's kind of slowly moving up again. So another thing to look at is it does have a trend line coming back to here. So really, I guess I'm bullish on this until it breaks this purple trend line. This purple trend line breaking, I think, would be confirmation that things don't look good for this stock anymore. But until then, yeah, probably we continue higher. I don't know if Netflix is even relevant anymore, but I'll take a quick look at it. I guess basically Netflix is just consolidating sideways. You could either do this, making kind of a trend channel. It looks like it might be, head and shoulders, left shoulder, head, right shoulder. It definitely looks like it's at major resistance here. Maybe it goes just a tiny bit higher. 492 or so makes a top, and I expect a topping formation and then move down, some sort of correction here. So it's more in line with the other major indices. Short term, long term, we'll probably have to see if it holds this trend line down here. And if it does, then maybe we have another leg up from there. If it breaks down, then yeah, it's probably a big correction coming beyond short term. Okay, so if we go over to more of the smaller cap stuff, the Russell 2000, I guess the picture here is clear. We had this consolidation, a breakdown, or a lower trend line, a breakdown, and then a recovery. And then from there, it basically, ripped all the way to the top of this consolidation pattern. So it's at the top of this trend line. Because it had a false breakdown, well, I guess it's really hard to say because, okay, there wasn't a lot of points on this trend line. There wasn't a lot of reactions. So you could say, okay, this is just in a larger range. And from here, we really have to see. If it starts looking like it's making a topping pattern, which it does not right now, I would say it's just kind of back testing this trend line before it goes higher. But if that changes and it looks like it's started making a topping pattern, or it has a quick flush down breaking below this, then I would say we've hit a top for now and then we're going down. But the way it looks at this point is kind of biased bullish. So maybe if we do break above this, then probably the next major level is the 220s, so close to all-time highs. So there's that. So if you look at the IWM to SPX ratio, this is something I've been having fun with lately. You can see we did bottom where it was kind of expected. This was like the last ditch effort to bottom, broke a little bit below the bottoms for like the last 15 years, 15 to 17 years, and then it recovered. And so now probably looking for something like an inverse head and shoulders pattern to start to form. So maybe it rips a little bit higher and then consolidates, and then this would be like the most bullish, is if it did something like this, where a little bit higher up to here, consolidation, and then a break above this blue line level. That would be super bullish for IWM compared to other stuff. All right. So the ARK-K fund. The sort of lines that are drawn are all over the place on this. But what is kind of, I guess really the main takeaway from what I see here is we've been in a sort of bottoming, possible bottoming formation here, where we even had an uptrend here and then broke down, and then it turned out to be a false breakdown, and now we're in the range of the uptrend. So I would probably expect a little bit more upside, and then we'll see from there. It generally looks like this downtrend is turning into an uptrend though, so I think it would be wild to see this turn into another like steep bubble-like uptrend where it just almost goes straight up. That's going to be a lot harder to see. Probably what I would expect is this kind of drifts upward for a while, maybe a few more months, and then we have a major correction on it. But that remains to be seen. All I can see now is that we're within range, and the next level, probably major level to break to the upside, is around here, 51.60 or so. And that's what we're running into right now. So if we consolidate and break above that, then that's, there's not a lot of resistance above that, maybe around 58.70. And then beyond that, it's almost like just wherever it decides to turn around. There's no strong resistance above that I can see, all the way up to the previous highs. All right, so let's look at the major commodities. Actually, before we do that, let's look at I guess what I would call like the financial condition indicators. The dollar index, big picture, we broke out in October 2022. We made sort of a high and then tanked below that, consolidated, broke higher, and then we rolled over and we came down. And now, so we're at this trend line, basically halted right on that and bounced off of it. So I think what I see is just a consolidation that continues for some time. So do we see this eventually, go sideways for a bit, come down here, retest this lower trend line, which hasn't been confirmed yet, retest somewhere down here to form a lower trend line, and then come up, and then maybe do something like this, break out to the upside. That might be kind of my bias, but it's not. I can't really say what the overall pattern it's forming is yet, so I would say just wait and see on this. I don't see much to go off of here other than it bounced on this trend line, and that's potentially a cue for a correction in the market. So if we go to 10-year yield, I think this is close to a major area. Well, I guess there's two possible major areas it could stop at. One is this trend channel midpoint, where usually you get sort of grinding around along. So if it goes a little lower and then grinds along here, that's probably one scenario. Another scenario is if this is a trend line that becomes respected, then we kind of stop here. And I think support for that idea that that would be respected is that we're near major reaction points, although we did push a little bit below. So if this went too far to the downside, I think it could definitely bounce. Another thing to look at is the fact that we have been in this smaller trend channel and we broke below it. Oftentimes, downward trend channels that get broken to the downside snap back and then break to the other side. So that would kind of indicate that this is the bottom here of the 10-year yield. If it's not, then I would expect maybe a little bit lower, and then we'll see from there. But yeah, heavy bias towards this snapping back and moving up again. And after such a steep downward move, that's just generally expected. So probably, a snapback or a consolidation to the right. I don't think there's a lot more downside here, which is not necessarily bullish for the market, at least short term. If you look at 2-year yields, we've basically, let's see, we probably can find a trend line that this has been following as well, or trend channel. Something like this. Probably something like this, where we're ready for the 2-year yields to snap back a little bit, rebound a little bit. Even RSI divergence is showing up. But long term, I think I expect this, after some consolidation, to continue downwards. I don't really know what my bias long term for this is. Probably similar, continue downwards after some consolidation. But we got to give them both some time, maybe a few weeks. If you look at the 10-year, 2-year yield spread, we're kind of right at this point where I expect this had better be an ultimate bottom here. Otherwise, this breaks down from here and we have a yield curve kind of full reinversion. You can see we almost de-inverted to 0% difference in the two, or zero difference, but we've had quite a correction. So I think from here, my expectation is we find a bottom, round out, and then continue this upward trend. This is definitely, and that would kind of show like a double bottom, sort of, I don't know, complex inverse head and shoulders. Not sure what you would call this because there's two heads technically. but there's symmetry on this side and this side to show that if that symmetry is followed, then higher it goes after a bit of consolidation. TLT, which is kind of closer to the 30 or 20 plus year treasury bond ETF, so closer to the longest end of the curve. We've had a clear breakout of this down trend channel, so it's possible that we get a back test here. In fact, after such a strong breakout, I'd say it's almost probable, especially if we're going into the resistance here. So my expectation would be, pullback and then continuation because we've had this breakout. How far that it pulls back, that's and then the question entirely. I mean, you could see it pull back, all the way to here and then make a double bottom or something. It's hard to say how much, but I think what I am confident in is that short term, the upside to this is very limited to none. Junk bonds. JNK. We've pretty much broken above every trend line we can break above. And in a somewhat strong fashion. Like if you go to the daily chart, it's stalled out. But on the weekly chart, this is a strong break above. Not a lot of line, so that's a little concerning. Is that, but at the same time, it's possible not many people are looking at this trend line as the breakout point. Like you can see, like the higher volume points were random, if you ask me. So maybe volume doesn't mean that much on the JNK ETF, but it is very close to all-time high. So I would expect if we hit all-time highs, that's going to be a huge, or if it hits this 96, 97 level where the previous all-time highs were, that's going to be a huge level of resistance. So I would expect a definite correction by that time. So at this rate, it's like 2 more weeks and then we're there. LQD, similar in that it looks like we might have a couple more weeks of upside and then a big correction. And I see that because we've got this long trend line that's been followed and we're kind of close to back testing it with a couple more strong weeks of upside. But for now, there's really not much resistance in the way. So I would say, it could easily continue. Maybe a little bit of consolidation sideways, like a week or so, but ultimately it looks like it's ready to move higher or continue moving higher. And like the real breakout was down here at 107, so very fast breakout. It's about halfway through that move up from the breakout. And all of this shows that the market is really moving back into a risk-on mode. Like, if it wasn't obvious by the fact that major indices were breaking out, it should be kind of confirmed by what bonds are doing. And I guess the bears would say, okay, this is concerning because at least for treasury yields, usually treasury yields tanking that quickly is a sign of economic crisis. And actually, if you go to the 10-year yield and see how fast it has crashed in the past, like this is a really fast breakdown. Like the last time we saw that kind of move down was during the 2020 market crash. So the fact that it's crashing this fast with no market crash kind of raises an eyebrow. Will the market crash be delayed? Or is this just a major shift in market sentiment that doesn't have a lot to do with, things breaking in the background? Because, 2020, that was stuff, people panicking, things breaking. Now it's like a panic of, oh my gosh, we're missing the market rally, move from risk off to risk on. And the fact that treasury yields are tanking means people are piling in to buy treasury yields. So it could mean they're expecting and um, front running to buy treasury yields before the Fed drops rates, so they can lock in those higher percentage yields. Why they're doing that instead of going into just only high risk stocks? Maybe they expect trouble, you know, in the next 1 to 2 years down the line in the market. I don't super well understand what drives bond yields, but I do know that in some sense that bond yields drive the market. Um, okay, so if we look at commodities, we're kind of running late on this, so let's just go to the major stuff. GSG, I don't really see much to look at. Let's look at the ones I care more about. So that would be agricultural stuff. It looks like soy may be ready to break out. Corn looks like it formed a double bottom. If it recovers this trend line, then I would expect it to break out and make a big move higher. Oats, a little harder to say, but it may have formed a bottom back here and moves higher from here. Wheat may have formed a bottom. You can see it was on this downtrend line, broke down twice below. Actually, gosh, you could just say this is the trend line. Tagged the bottom trend line and then rebounded. Now, this is kind of big in that this sort of was a major area. I would say wheat could maybe go a little lower, but it's also possible it bottomed from here. Sugar, clearly something was causing it to melt up while everything else was dropping, so now it's reversing course. Yeah, that's all I want to look at for agriculture. Copper. Oh, you know what? That's why wheat looked so weird. I didn't have a logarithmic chart on. Yeah, okay. There we go. So, never mind that. The weirdness in the charting doesn't change anything. Copper did, I think, break out of this long-term trend line from February. Big consolidation, and now I think a breakout. It looked like it was a false breakout for a bit, but the fact that it broke out, broke down, and then broke out again a couple days later, to me that kind of signals that I think it's probably a legitimate breakout. Obviously, we'll have to wait a couple days to see, but if it does break out, then I think it's going a lot higher, probably something like, at the very least, something like here, near all-time highs again. So that's like 22%, which is a decent move up. So definitely looking bullish on copper. Now the fact that copper, I think, moves most inversely to the dollar. So the fact that copper has broken out, whereas the dollar has just hit trend line support, that's something to watch out for. I think, either the dollar has to move sideways for a while and then break down, or copper has a false breakout and reverses course. If the dollar suddenly reverses course from where it is now and breaks out, or moves up strongly again, then I think this is a false breakout for copper. Let's see. Zinc might be good to look at. It's kind of just wandering around this trend line, like where it tried to break down and tried to recover. It looks like it hasn't really decided which way to go yet. Like this could be, it looks like a big bear flag to me. But if it does break above this upper trend line, then it, you know, shows that it's probably going higher. So whenever this breaks, that's basically the direction I would think it's going. Steel looks like it's kind of trying to break out here from this long consolidation. So if that holds and goes higher from here, this is the steel ETF. This isn't steel spot price. This is steel ETF. But if it holds there and moves higher, then yeah, we've got a decent new high coming in steel. And after a long consolidation like this, I guess that makes sense. Alcoa is kind of a proxy for aluminum because it's, you know, really hard to tell what's going on in aluminum. It did definitely have a major breakout here from the consolidation from January. So I expect definitely a pullback after this strong move up, but probably continuation up after that. We can also look at precious metals. But before that, let's look at energy, crude oil. Actually, copper to money supply is something I also like to look at. If you say that this is a trend line, maybe just broke out of, I guess we're not really seeing a lot here that's not shown in the copper chart. So let's just skip over this, go to crude oil. Now crude oil, I don't see a lot other than that we have a potential bottom here coming in soon. But overall what I see is kind of a longer term consolidation where you see it, you know, made a top and then a slightly lower top, but it's been bound in this range. So will we see this come down to this lower bound again, or does this reverse and go up? Either way, I think it consolidates here for at least a little bit and then makes its choice. Natural gas, it's broken down from this sort of long bear flag, so I don't see any reason for it to not continue moving down. Maybe to form a double bottom. So that's kind of all I have there. XLE. Now this is interesting. Okay, so the weakness has started to show in the XLE because it did break down and then it recovered. So I think what we look for from here, probably short-term upside because it did recover, but because it's a breakdown from a rising wedge after a big move up, I would think that eventually, like if it breaks down again, then probably that will be the real deal. So for now, probably short-term bullish on this, especially, I mean, can you make any, yeah, there's not much to see here than that. Yeah, kind of caught support on a lower trend line. That's really all. There's no upper trend line other than the longer term one. So maybe this comes up and makes a new slightly higher high in the XLE. XOM, sorry. I just want to look at the XOP. Now the XOP does look like it's broken down and hasn't recovered yet. But it's sort of just drifting in this other consolidation pattern, so probably bounces around here, and then once that breaks, that will be the direction of the bigger move. Gold. Gold has been kind of exciting lately. We had an expected breakout, and then it turned out to be a false breakout. And, you know, basically went straight to break the first trend line. So now it's just kind of, we're trying to see how far it falls. Like the fact that you had this huge topping candle, bearish engulfing topping candle, that's pretty bearish for gold. So the question is, how long is it bearish for gold? I don't think it's so bearish that it comes crashing down and breaks this whole pattern to the downside. But what I do think, just by the short-term price action, the fact that it broke this trend line and back tested, I think it's got some more downside, at least short term. Maybe it finds support around 1940 or so, and then that's when it will give another go at breaking out. But yeah, I don't say that it's going to bounce from 1940 with a lot of confidence. It's just maybe because there's some resistance levels or some support levels there. Silver maybe looks a little better because we've got this shorter term consolidation that it broke out of. I guess it's kind of just range bound in this consolidation, or in a new consolidation, I would say, but it is above the trend line for now. It broke above, broke down, now is above. So this trend line is probably no longer very useful. And we have to look for what's the next consolidation of this. Now, something that might be encouraging is the fact that this gold to silver ratio did break to the upside out of this consolidation, and then it broke down. So it's kind of the second time it's broken to the upside and then broke down. So I don't really know anymore what to expect from this. If it does break to the upside again, I guess I'd just say forget this pattern and look at horizontal support resistance. And if it breaks above this, then we're probably going to go close to previous highs in this silver or gold to silver ratio. Otherwise, eventually we break down from this and make a big move down in the gold to silver ratio, which would be very bullish for both gold and silver. Platinum is another one in the precious metals. It looks like it's forming sort of a rounded bottom. We had a couple breakdowns of multiple levels of interest and then a recovery. So to me, this is like the most bullish chart of the precious metals just because it hasn't made much of an up move yet. But we kind of have to wait until it breaks this trend line a second time to really say it's ready to go. It did break this trend line once to the upside, and then that turned out to be a false breakout. Eventually, with these kinds of consolidations, a breakout to the upside ends up being the real deal. Palladium has really been a mover. It's been a long downtrend, cutting the price in half, bottomed out around 950, and this is a near double bottom with bullish divergence, broke down below the trend line, and then broke back out with real, this was like 11% move in one day. So probably huge buying volume behind that. This is typical false breakdown price action that's typical of a bottom. So I'd say short term palladium is very bullish, and also broke above the upper trend line. So yeah, short term palladium's probably going to get a huge rebound. I wouldn't be surprised if it goes up all the way to this major breakdown level from here. So yeah, if you're taking that as a trade, I don't even know if you'd have time to get on before Monday. At that point, it's like risk reward is no longer worth it if it continues moving this quickly. And yeah, that's pretty much the main charts I wanted to go over. So I guess to sum it up, overall, I think the FANG stocks have very limited to no upside. The FANG or Magnificent Seven, whatever you want to call them, the biggest market cap tech stocks, have very little upside. The main indices probably are, about to pull back, but I am generally bullish on them for the next probably couple weeks to month, until they run out of momentum, and then based on previous sort of melt ups like this, I would think there's going to be a pretty abrupt reversal and mini crash in the market once that ends. So, it's really hard to say when it's going to end. I think you'll see the signs that it's about to reverse as they're coming. There's no way to see them before they start to come. So yeah, stay safe out there. This isn't any sort of trading recommendation. In fact, you might be best off to reverse anything I say you should do, because my track record hasn't been great. But whatever the case is, I hope we all learn, and good luck.